Good day, guys. Welcome to Trading Arbitrage Opportunities with Calvin Ports. Welcome to episode episode 12, and we had a few movements in our positive direction in the previous uh, video on episode 11. So it was an economic event. Let me. What I want to show you here is that we were expecting the market to take off ahead of uh, the interest rate decisions. Economically, when we look at the market sentiment, we can see that the pound had actually recovered, and that, according to myself, it was not necessary for the central bank to cut interest rates at a time of high inflation. Okay, that's what I believe. I believe that the inflation is high enough, but inflation and has to be aligned with the GDP. We need to look at the GDP and say, is the GDP well recovered or not? So these guys decided to cut interest rates for the GDP because the inflation is okay. So they decided to cut it for the GDP. The GDP has not recovered just yet, but I believe that it was going to recover anyway. So they saw a tiny bit lower in GDP, and they decided to cut interest rates, but then it will come at the expense of you know very high inflation. That inflation might jump all the way up to 6%, 8%, but that's fine. Let's After this interest rate cut, what will happen is that the GDP will spike higher. It might recover normally, but it will give us a spike, what I call a non-stable growth in the inflation. But then, what our target here was reached. I was expecting a reversal at the 50% FEEP, but then there are two things that might happen. This is a weekly candlestick. That weekly candlestick starts here. It's 1, 2, 3, 4, 5. This is the daily time frame. So this weekly candle has given us what looks like a bullish engulfing pattern. What is it? These people like creating. Let's see, 1, 2, 3, 4, 5. So it's a bullish engulfing pattern because the previous weekly candle is here, and this candle is a little bit above. Okay, let me show you with that thing. Let me give you this line and show you what I'm talking about. I don't want to talk about things that don't exist. So this candle has grown above 1, 2, 3, 4, 5. Has grown above this, which is signals a bullish engulfing pattern, and it closed above it. So we reached our target. We took profit here at this level because we were doubting that the market might drop lower before it takes off. It might be irrational because of the interest rate cuts. But then, and we have a market gap here. Of course, we're expecting the market to reverse. We're going to be selling it in the subsequent week. However, the market does not necessarily have to turn around here. It might give us a bit higher, a tiny bit higher, and after that, just to uh, take off above this high a little bit here, and then perhaps it might do it with a wick because normally when the weekly time frame opens, it opens with something like a wick, and after that it might do what it does. At this moment, I'm not expecting that much of a pullback in the pound because the market sentiment is positive. What might happen, what I believe will happen after those interest rate cuts is that the market will reverse. That's the nature of the market. When they give you a market sentiment that tells you to buy the market, the opposite happens. Probably because the hedge funds are trying to make money out of those retail traders. So the retail traders were waiting for the interest rate releases on the 7th. I hope you can see the 7th down here. They were waiting for the 7th, and we took our profits at the very same date that they were looking for, and the market gave us a tiny bit higher. And you can see how tiny this candle is. Imagine trying to trade this when you could have traded all of those big candles. So what will happen is that when this candle opens, there are two things that might happen. It might, I'm expecting it because the market sentiment is bearish. We're expecting to drop lower. So what will happen is that it will create a wick like this. But when the candle opens from here, it will move higher first, creating a wick. And after that wick, it'll drop lower because the hedge funds have not taken profit just yet. Let me tell you why I'm saying they have not taken profit. They want to take profit. The hedge funds are calculated investors. They use a lot of calculations. So their take profit level is normally above the previous high, especially when the economic sentiment in the pound is recovering, and in the SGD, the SGD being the collapsing currency, the selling currency. So what they will do is they might give us a tiny wick above the previous high. It doesn't have to be that big, but after this, what will happen will be a drop into the 23.6 here. Uh, I turned this thing around. I don't like fixing things when I'm recording a video. So that might happen, but we need to go above this guy. So the reason why we took profit here is because we have already made enough money. We don't want the market to reverse with us with all of our profits and then take off. There's no certainty in the markets, and we don't want to take that kind of a risk. So we're already running out of time. I was trying to explain something here that has to do with market sentiment, and I think I ran out of time because we're already at the 7th minute, the 8th minute, and I'm trying to explain what economic divergence is, and we'll try to explain that in the next video. Uh, okay, this is an economic divergence. We are looking forward to news releases, and those news releases will be showing them to you on the next video. Uh, those news releases are the unemployment rate, both on the pound and the Singapore dollar, and I will be trying to explain to you guys how I find economic divergence in the currency and how to best use that economic divergence as a confluence in my direction. Remember, I'm praying for the market to get to the weekly time frame channel, this weekly time frame trend line that I've been praying to have. I just wish that, perhaps we might get a tiny delay in the market, like a correction that goes all the way in that direction. But I would love to have, a touch on this weekly time frame channel. This guy, see this guy? This guy will make me believe that the hedge funds made enough money. I just want a manipulation or a lend. It should either lend on this weekly, weekly trend line, or just, that's my hope. I'm hoping for that. Normally, when these things happen, they happen because the hedge funds are trying to make enough money out of the little that they have. They're trying to manipulate you. But when the market is moving higher, it normally manipulates you lower. The target is higher, but they manipulate you lower. They cannot manipulate you higher because that's where you're going. So they need to collect as many stop losses from down here, which is why I'm looking at this weekly time frame candle. You just want the market to cut this, and if it does that, let me show you what I'm talking about. You see, what made me believe that I should, this is a daily time frame, that I should buy uh, the market here. I had what looks like a trend line here. I know it's on the lower time frame. I had something like this. So my expectation was that I need the market to drop below this red line. Why? Because we want to go below this candle first before we take off. So what happened is that we went below this candle. This is the three touch model that I'm following. This is one, two on this trend line. The third touch broke below it. I always like to explain trading not in a difficult way. And after uh, taking the stop losses for people who entered the market here, after collecting them, the hedge funds had enough money to move higher. Now we need to come back and you know take collect all of the stop losses. Let's say I entered the market here and I did not take profit, and my stop loss is somewhere below here. The market has to come back, stop me out before we take off. That's how the hedge funds operate. They want to take profit. They want to stop you out, make you decide, make you give up on your trade, and as soon as you give up, the market will take off. That's how it does it. But this is on a lower time frame. This is like the 1 hour time frame. So here we we're expecting to get stopped out. That's what I'm doing. That's why I'm expecting the market to come down here and stop everybody who entered here out and take us to the actual direction that we're looking for. Because the market sentiment is telling us that this guy has to give us the replica of the rally here and take off. And this replica will be larger. The replica that will happen here, the next rally, will be larger than this. How do I know that? Economic sentiment. The recession is over, and okay, the recession in the pound is over, not in the Singapore dollar. In the pound, the recession is over, so the rally here will be much larger. And what I love about these trades is that I'll be having a small lot size position that I will allow to grow over time. There's a one trade that I will open that might take 2 years before I take profit. So that's normally how I do these things. I have uh, two accounts, but the best way to do this economic divergence system is that uh, you need to have a few accounts. One account should be used to go to do what we call hedge inflation, opening positions and taking advantage of the interest rates over like a period of 2 years, 3 years. That's the plan that we have. Uh, a thing that I was explaining not so long ago about candlesticks on the daily time frame is here. You see, we had a takeoff in the market and we came back to stop them out first before we do what? We give you that big move. So this is where the hedge funds are making money. And this is normal. This is what people call the Wyckoff schematics. I don't know what they call it. The spring, the test, and all of those things. Uh, that's the message that Wyckoff was trying to explain to us. Goodbye, guys. I'll see you on the 13th episode.